What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm actually on a journey to a $100,000 dividend investment portfolio while also answering y'all's questions along the way. And of course expressing my love for personal finance along the way. And in today's video we're going over why dividend investing always wins. But before we get into that, don't forget to subscribe to the channel if you have not already. Leave a like on the video, it helps out the growth of my channel tremendously. And comment if this information was helpful or you just want to say hi. I love interacting with y'all here on YouTube and on TikTok as well. But without further ado, let's roll the intro. Now, as always, we have to go over my portfolio value for the week. My uploading schedule has been crazy inconsistent lately. I do apologize for that. I'm just finishing moving into this place right here. We are just about finished, so I will be able to upload more consistently here. More to come, but as we can see, hopping into my portfolio, on the day, I'm currently up $115 or about 0.84%. On the week, I'm down $244 or about 1.73%. On the month, I am down $200 or about 1.4%. On the 3 months, I am down about $20 or about 0.15%. And then on the year, as you can see, I'm still up $1,400 or about 11%. And then on the all-time, I'm still up $1,944 or about 16.28%. I mean, as we can see, just hopping into my portfolio when things are tremendously bad right now, when a lot of portfolios are getting hit hard, even mine, as we can see, it's on a downtrend right now. Overall, I am still up about 16% and I'm still consistently getting paid dividends from this portfolio. That's the amazing thing in my opinion about dividend investing, but more to come on that later. I gotta show you all the buys that I did do last week. Or one purchase, should I say, because I only did one purchase last week. Now, what I ended up buying last week was Target. I actually bought $118.81 worth of Target. As we can see, hopping into Target, I now have 4.07 shares. That's at an average cost of $230.32. I am down overall about $59.11 or about 6.33%. With Target, I am not worried about this at all. I want to continue to buy the dip right now, so that way when it does go back up, I will be positive. That is also the beauty about dividend investing. I can invest into companies, still get paid passive income, and be negative on them at the same time. What I personally like to do, like with Target, is buy the dip, so that way when it does go back up, like I said, I'm going to be positive while also getting paid more dividends at the same time. I'm slowly creeping up on $1,000 worth of Target in my portfolio, which is perfect for me. I do hope that by the time I hit about 1,200 of Target in this portfolio, it will be positive by then. Only time will tell, but that's okay because I'm in it for the long game, as y'all know. Now, why is dividend investing always going to win? First, we need to know what dividend investing is. So dividend investing can be summarized as a method of buying stocks that pay dividends in order to receive a regular income stream from your investments. This income is in addition to any other growth in your portfolio as its stocks or any other holdings gain value. Like I said before, you're building passive income and you're going to have passive income regardless of how your portfolio is performing in the market. But when it comes to my portfolio specifically, I don't just look at the passive income that I could be getting from my stock. I look into good quality stocks that just so happen to pay dividends. I look at factors like market value, dividend yield, market cap, revenue reports. There are a lot of factors that go into dividend investing and how successful you can be at dividend investing. The most specific example that I can personally give of dividend investing being successful in my portfolio is Hormel Foods. Now, as we can see with Hormel Foods, if we go down to my holding here, I have about 22 shares. It's valued about $1,000 and the average cost is about $45.19. I am up overall about $38 or about 3%. For the longest time, Hormel Foods was down last year in 2020. As we can see going into the year chart, my average holding in Hormel Foods was about $45. This entire 3-month period I was down on Hormel Foods. Even before that, I was positive a little bit for a while, but then it went down all the way. And this is the best example that I can give y'all of dividend investing and the effectiveness of dividend investing and why dividend investing wins, specifically in my portfolio. So instead of getting scared and selling off of this stock, I doubled down, I bought the dip, I brought down my average cost all the way from $48 to $45, and now when it shot all the way back up, now it's cruising around $46. I am positive and I'm still getting paid consistent dividends, and I'm getting paid more dividends now than I was before when my cost was higher, so now I get paid more dividends for a cheaper price. That to me is the beauty of dividend investing and how you can gain the most out of a specific stock. And as we can see hopping into my portfolio is doing well even now that the market is down overall about 12 to 15%. I am still positive in my main holdings like Microsoft and Apple. And realistically, I'm only down about 4 holdings in my entire 22 holding portfolio. This is because I invest into good solid quality companies that just so happen to pay a dividend. So yes, I am a dividend investor. Dividend yield is very important to me, but at the end of the day, I invest into companies like Microsoft and Apple that have less than a 1% dividend yield because I know during times like this, they are still going to perform relatively well. As you can see, I'm still up overall $200 on both Microsoft and Apple. What helps me stay invested into these companies is that I believe in them long term. I know that if either Apple or Microsoft are going to go down about $100 today, I'm going to buy the dip. I'm going to throw as much money as I can at that because I know the value behind Microsoft and Apple. I see myself holding them long term, and it gives me the opportunity to buy more shares at a cheaper price, bringing down my average cost and giving me more dividends for a cheaper price, and of course ultimately giving me more gain. So that's also extremely important when it comes into dividend investing. There's a lot of factors that go into it, but if you do not believe in the company, you are not going to hold long term. Now if you are picking up what I'm putting down, or it's a little bit harder to grasp this concept of dividend investing, don't just take my word for it, take John Mogul's word for it. And if you don't know who he is the founder and creator of the Vanguard Group. You know, the index fund like VOO, VTI, with VOO being the most famous of course behind the FIRE movement. Financially independent, retire early. People in the FIRE movement use VOO to actually retire off of. Now this guy has major credibility and he has 10 key rules to investing. I don't want to go over all of them, I just want to highlight the first two. Those are the most important in my eyes. As we can see, the number one rule for him is reversion to the mean. What's hot today isn't likely to be hot tomorrow. The stock market reverts to fundamental returns over the long run. Don't follow the herd. What I do pick up from this is that regardless of stock market going up or down, there's a consistent steady line going like this all the way throughout history. One thing that I have learned from dividend investing that's helped me revert to the mean is just consistently investing every single week regardless of how the stock market is performing. For me personally, it helps eliminate the emotion that I may feel when a stock is going up or down, and it just helps me consistently invest every single week going all the way up. Now let's visualize this a little bit more. As we can see, this is a historical chart of the S&P 500. All the way from 1930 to 2010. And as you can see, what I'm talking about, consistently investing every single week no matter what, no matter how the stock market performs, good or bad, that is that red line going all the way through the middle. What typically ends up happening is people get scared when the market goes down and they start selling off, and then they buy back in when the market is good. Just rinse and repeat that process until you about lose all your money. By me investing consistently every single week, I am able to take out the bias, the feelings, and get the most bang for my buck when it comes to dividend investing. Even just reverting back to my all-time high of my portfolio, you can see that it goes up and down consistently, but the important thing is if I draw a line from where I started to where I am today, it's consistently going up. And even over the past year, it has gone down and up a lot. But I am not too worried because I am a long-term dividend investor. And like I said, I'm going to buy that dip and I'm going to consistently go up over time. And the number two rule for John Mogul that I think is honestly the most important, I would put this at number one, is that time is your friend and impulse is your enemy. Take advantage of compound interest and don't be captive by the siren song of the market that only seduces you into buying stocks that have already soared. That is the infamous line of time in the market is always going to beat trying to time the market. Now in my opinion, those are the top two rules to dividend investing, or just investing in general, but of course it's always hard to visualize, so let's give some examples. Now let's take my own portfolio for example. If I invest over the next 30 years consistently regardless of how the market performs, in 30 years my portfolio will be worth $299,816.75 while getting a passive income check annually of $14,990.84. That is not too bad at all. That's only putting in $100 every single month after my portfolio hits $100,000. But now let's do the same exact thing, investing $100 every single month over the next 30 years while also reinvesting the dividends, aka compound interest, and not looking at the market regardless of performance. As we can see, that portfolio is now worth $935,011.67 while also getting $46,000 a year of passive income. That just shows you the power of compound interest and dividend investing. The best part is you can automate this entire system. You can set up direct deposit into your account, invest $100 every single month, and also put on reinvesting dividends and not look at your dividend portfolio over the next 30 years. You can do all of this, and by the time that you retire, or in 30 years from now, however old you are, you will have a portfolio that's going to get you $46,000 a year of passive income. That is building wealth, and that's going to get you financially free. Now those are the top 3 reasons why dividend investing is going to continue to win, even in times like now where the market is down about 15%. As we saw, I gave personal examples from my portfolio. I give examples from John Mogul, one of the greatest investors of all time that created financially independent retire early movement, or essentially was a pioneer behind that movement. And I also gave you examples of how you can mindlessly do this process and repeat it. But I hope this video helps y'all. But I hope this video helps ease your mind about the future of the stock market. the future of your personal portfolio, and ultimately what is best for you in times like this when the market is down. I'm personally going to continue to buy the dip, put more money in, get more dividends for a cheaper price, and bring down my average cost, but hey, that's just me. Don't forget to like the video because it helps out my channel grow so much. Leave a comment down below if you are buying this dip, what you are buying, or if you just like this video and it was helpful. And then lastly, don't forget to subscribe to the channel if you have not already. That's all that I have for y'all this week. I will catch y'all next week.